And as you see from the chart, it is pretty much looks so much like the chart for the US dollar. What does that mean? It means that we are in a bear market, we are in a downtrend. We had this knee-jerk reaction or short covering. When I say knee-jerk reaction, I'm not discrediting the move, okay? The market is in a profound downtrend. When it moves into the opposite direction, you can call it a short covering or a knee-jerk, whatever you want to call it, but by no means we're not going to trade it. We are going to trade it because that's what we do. We trade what we see. And what's happening here is that there is a minor structure now that is set in place. We are above the 176, which is a big number, but there is another one that has now evolved from the last couple of weeks, which is this one over here. And that is the 101.6250. The 101.6250. And the concern that I have is we have not closed above that point. So we are very nicely came above the 99.25. All of you remember the 99.25. This is what we have been trading. And if you look at, just for the people that are joining us for the first time, these were the numbers from last week. We were buying it above the 100 and we were selling it below the 99.25. Now once you sell below a structural point, that structural point becomes a buy signal because it's above the market price. So if the market comes down below the 99.25, now that structural point, which was a short point, is above the price, it becomes your buy signal. And this is what happened on Friday. This is your 99.25, if you can see it here much clearer. So all of us, we went short below the 99.25. Once it came back above the 99.25, this is where we started buying again to capture this momentum move to the upside. This happened in Tokyo, but that was the ones that took it. And now the market has pushed higher, and that is your short covering rally, and we're closed pretty much near the high of the day. But we did not take the 101.62. This is a pretty decent close. It is a good close. It is a close that indicates continuation. And we are at 101.04. We have a structure point at 176, right there, which is so by definition right now our short entry is easy. We are going to short it below the structure point. So our short is going to be below 176. That is our structural short point. This was our structural long point before. And of course it will be our short stop. So we are going to short it. We're going to short it below 176. It is going to be our structural short point, and it is also going to be our stop. Now, where are we going to buy it? We want to buy it above the high of the day. I'm not sure what is the 101.21 is, so I'm going to take this off. The high of the day is 101.40. So this will be our buying point. So we'll buy it above 101.40. And we're going to place our stop. In this case, these lows represent the market side too. So our stop is going to be below 193. So we're going to be buying above 101.39. Our stop is going to be below 193.90 because that's the market side and we can use it as a low. And our structure long point, which is the key one now that we need to keep an eye on, is the 101.62. So this is actually good because if we get a move from 101.39 to the 101.62, you are going to look at an explosive move that probably is going to take you to the 102.21. So that is good because, and that is again a typical chart short covering rally. So for the Euro Yen, we're going to buy above 101.39. Our stop is going to be 100. So this is our stop is going to be 100.90. And the structure long point is 101.62. On the short side, we're going to go short below the structure point, which is 176. It is our structure short point and it is our stop. Okay? So that is the Euro Yen. Let me save that.